Hello, guys. Hope you are okay and hope you are safe. Sorry, it takes me a few minutes to get this chat working and this live working. So we are in the 5th of April, and in this month we might have some changes. Maybe in the market, maybe it's going to go down more, maybe it's going up. So all depends on coronavirus cures. So understand that I will be giving you some information. We have spoken last week about how the President Trump has done a lot, by sending money. Thank you, Trump, for the money. We didn't get this money yet, but for everybody, it's a bonus. Some people who have no jobs, some people who are laid off, some people. It could be a good thing in these hard ships, and a lot of things is going on. Now, first, in the situation of the market, you understand that in the whole market, you understand what's going on, okay? So a lot of industries and sectors have been hit so hard. For example, if you take aerospace sector, it means airplanes and airports, all the transportation get hit too much. It means total collapse or something like that, because people they don't go anywhere, and they are in their city, so they don't fly to anywhere in the planet. Okay, and this is something very, very important, because it makes the economy slow down. Now, when you slow down, what does it mean? It means a lot of jobs will be lost, a lot of laid offs. People are scared, and they just get a vacation and they go home. Okay, so the situation is bad, especially in this April. Okay, and understand that the market, in order to understand the market, is about opinion. Okay, sometimes you buy a stock, you think it's going up, so that's why you buy it to go long. Hello, Pablo. And some other people like you, they think that the market is going down, so they sell short. So it's just an opinion in the market. It's not a direct thing. It's not because there is, for example, all the economy slow, that means that the stock market will be slow. No, the market always do ahead things. Hello, Fabian. Thank you very much for coming. So what does it mean? It means the stock market shows some information before the market itself. Okay? So this is because of the freedom in the stock market. The stock market is worked by opinion. It means if all the people think that the market will go up, you will see that the market will be going up in the following weeks. Okay? If the majority think that the market will be going down, they sell short and they sell their investment and they watch, they don't trade too much. So you understand, it's all about traders. Okay? And these traders, they react to the news that it is in the market, because each day we have new news, and as you can see, a lot of things. Hello, 1982 Vinmar, thank you very much for coming. So as you might see, the following weeks there will be a change. Either the market will continue to go down because people fear that this year will be a bear market, and some people, they are not interested Some people they sell and they took their money, they put their money into their accounts and they watch. Okay, so those people who want real things to see in the market. Okay, so there are some who are speculators. Now, speculators, it means like what did happen to energy sector, because energy sector collapsed before the market collapsed. Okay, before weeks, and I have showed you before how the energy sector collapse, like with crude oil. I can show you right now a chart, and you see how Dow Jones has gone down, but energy sector has gone before. Now, understand that some industries, some sectors might be going up or down and not following the whole market. This happens always. So what you have to do, you have to put the sectors as I did before, I showed you before, and for my guys, I sometimes show them and I give them the list, and each week they watch what's going on, why this sector is going up, why these sectors are going down. They should know why. Okay, there should be something going on, and you can trade accordingly. Okay, so let's go now to the chart. I'm just trying to okay, let's go to the chart. Now you see Dow Jones. Let's see the crude oil. Is this the crude oil? Oh no, this is charting now. Let's see the oil here. Ah yes, okay. This is the oil, iPath, Series B, S&P 500, GSCI, crude oil. Okay, it's just the oil, ETF. Now, if we compare oil, this sector, with Dow Jones. Okay? Look that the oil was doing better before, and then it collapsed before Dow Jones. Okay, so it was here, it began collapsing here at 13 or at 12.93, depends on how you see it. The close of $12.93, and you see that this is the beginning of collapse. And then Dow Jones was going good, even if it goes down here, but it's not that much. But the real collapse, we can see it can begin here. So they are not the same. So see how the oil was doing, and see now the stock market has been going like this, and then it has been going up a little bit lately, okay? All the market has been going up a little bit lately. But as you can see, the oil has began before the Dow Jones. Let me see another one. Let me see another one. Let me see the oil by itself. We have okay. Let's see some. Yes, it's the same thing. So let's go and show you the energy sector. Yes, energy. Yes, this is energy sector for those maybe who have never seen the sector and industries. Please, if you use my chart, it's very good. It's excellent. If you have never used it, please try to use my chart, which is one of the best charts in the world. So this is energy sector, and this is the industries. Industries, we have here about 6 industries of Morningstar, which put them here. So let's see this industries. See? Okay. Oil and gas pipeline, here it goes down, but oil and gas has been doing worse, you see? Okay? Worse than the line. Now, when you see this line, it means that this line, it means that I put here with white, it means how oil and gas pipeline is doing worse than the Dow Jones. So the Dow Jones stops here, as you can see, it stops here, and then it goes up a little bit, and then it goes down. It might be having a lot of trouble. But as you can see, oil and gas has been doing so bad. Even we have a gap down. A gap down, this is because of the news. When the news are bad, almost all the stocks, they get shorted, so we have a gap down. Okay? Another one. So this one, oil and gas refining and marketing. So you can see that it starts here. The downtrend starts here, see? So it means that Dow Jones are doing better than these stocks here in this industry, which is called oil and gas refining and marketing. And then it go down. So if you, for example, if you bought Dow Jones ETF, which is called DIA, if you bought it, you will be better than buying like this industry, which is oil and gas refining and marketing. Another one, the same, beginning from here, as you can see. So we'll take these lines. As you can see, when you see the line is above, it means that Dow Jones is doing better than major integrated oil and gas. Another one, independent oil and gas. Here, they were doing better since 12 December. They were doing better until 23 January. And then from 23 January, they collapse. And you see that it's very, very hard. You can see it. Okay, you can see the downtrend. It means if you have shorted these stocks, you will be better. Another one, which is oil and gas drilling and exploration, the same, and oil and gas equipment services is the same. Okay, so this is just to show you that oil, it means energy sector in general, it was hit more than the market. Okay, just if you want to see stocks, you can just go down. For example, this is stocks called CEO. So the stock was 181, now 112. Okay, so it's a lot. You can see those stocks. Murphy USA. Okay, see, you see here a gap up, excellent gap up. From 94, it goes to 118. It goes up, then it collapses. But this stock is better than the Dow Jones. For example, here, let's say here the high here, 121.84. It means it has not gone that much like the Dow Jones, but it is better than Dow Jones. This stock. This stock is worse. This stock is worse. PNRG, you see how it collapsed here. Dow Jones is here. So it collapsed. So these are just examples of stocks and industries. Okay. Okay. So this is just an indication that some sectors can go down and not following the market. So you should, if you are following the indexes, the sectors, you should just get an idea what's going on in the market, because understanding this, you can trade. Because if you don't see any, if you just get the news they can apply in 1 day or two. Especially when they come the news, it will be reflected into the stock. Okay, right away. It doesn't wait. For example, if there is bad news about a company, like earning news, if there is bad news, sometimes we have a gap down. Tomorrow it's over. You find that the stock has gone into a gap down. Or if it is good news, and it will have a gap up, so it's too late if you didn't buy the stock. So understand this. What I showed you is the price. Now, I always explain that the price never lies. The price, what you see, the price is giving you the real thing, what the traders are doing in the market. Okay? What some people are expecting, or what analysts say, this is something out of the real thing, after the real world. The real world is what you see. Okay? If someone tells me, oh, okay, oh, this year is a bear market. Oh, this year is a bull market. Okay? You know, we will never know until the end finishes on the 31st December 2020. You will never know. Maybe now it's going bad, these 2 months or 3. Maybe in April, May, June, July, the stock market goes up and we have a good year. So we will never know. So expecting something or hoping for something doesn't help. So you should always think about the worst, and you trade according to your opinion. Never take an opinion of someone else, because it is your money. Okay, you should decide for your money what to do. So are you an investor? So what you should do in investment right now, where the stock market is going down, okay? And if you have some speculation, okay? Speculation, because I spoken about it in my latest ebook. So speculation is what we call it. It works with position trading, because a lot of people, they know swing trading, they know day trading, they know investing, but this position trading I have explained a lot, but a lot of people, they don't know what is it or how it works. So I will explain to you. So speculation is when you get some news. I'm not speaking about the news about a bad thing or new thing that happened. No, I'm not speaking about that. I'm speaking about information. For example, a lot of politicians in Saudi Arabia or Russia or in USA, they say we will sell more oil in the future. So a lot of people, they begin to think, and when they see the stock market begin in that sector, because oil has begun doing bad things, a downtrend, before the stock market. So what does it mean? It means a lot of people have already begun to sell short this sector. Either you can sell short the ETF, you can sell industries, you sell in ETFs, or you can sell short stocks. So whatever you want, or you can use options, put options. You can use anything, but understand that speculation you should wait. You should wait. It's like swing trading, but it is not based really on technical analysis. Okay? It's not really based on technical analysis. You can say 50% technical analysis, 50% information, and that you base your trend on. Okay? So you should have some information, and this is what we call speculation. There are in the past very excellent traders who are speculators, like the famous hedge fund Soros. If you have heard about him, he is one of the best speculator in the world. In the past, also we have some speculators like Jesse Livermore. I always like this guy, but he is from the 20th century. But all what he did is he follows a lot the market. For example, each 8 years, 10 years, the market should collapse. This is just some information that most of the people know. But in order to sell short or to do this speculation, you should risk a lot of money. You can risk 50% of your money if you are going to do this. So it's not for the people who are scared to lose. Because when they make money, they can double or triple or whatever they do in their money. For example, those guys who sell short energy sector at the beginning, they have made a lot of money, especially when they buy puts, for example, put options for 3 months or 6 months. Okay? But they are aware if they are wrong, they should exit and they lose a lot of money. So understand that it is a risky thing, and people who are doing speculation, they understand that they are doing a lot of risk in their portfolio. So they might win and make a lot of money, but they might also lose, and they lose a lot of money. So for you, if you are not into speculation, don't speculate. It means don't say, okay, the market will be good this year. Okay, let's go long, and that's it. And you begin to see the stock market next week go down, the other one go down for 2 months, 3 months, 6 months. You lose 50% or 70% of your money. That's over. It means that's over. You lose all your money, and thinking that the market will be going up, but the market did not and will not go up. Okay? Or you sell short, thinking that the market will be going down, and you stay 1 week, 2 weeks, 1 month, 2 months, and the stock market is going up, and you lose a lot of chunk of your money. So try to be careful when you throw your money in the market, because we are in a volatile market. Whatever you put is at a big risk, especially these months. Okay? But there are other ways, techniques I use. I put in my investing ebook, the new ebook that I put it. So guys, if you have time, if you like long investment, or if you have some investment, you can read that book. It will give you insights what to do now, because there are things you should do on time. Okay? You should do on time. It means you cannot say, I will do it next year. It will never work. FRDM said, I am chicken right now. Yes, you stay chicken, man. Because sometimes those who are doing the good guys, or the Batman, and I don't know, these guys who are Superman and those heroes, they get slaughtered in the market. So understand that a lot of people, they lost a lot of money when they go against the market. They just speculate. They just think that this stock will go down. Let's say in the earning news, you think you have read, analysts said, no, this time the company has done bad. Okay? The company has done bad. We know it. It will have a gap down. Just sell short. And some people, they think it is true. They think that analysts or anyone else know better than the market. He knows secrets. But understand, guys, that no one knows. Yes, you can predict. Anyone can predict. For example, you get two people in the street. Okay? You ask him, what do you think about the market? Up or down? One is telling you up when the other is down. But how do we know if it is true, up or down? In the 31st of December. Okay? 31st of December this year. That date, after 4 p.m., we should see the year, if it is good or bad. But, okay? So, and anyone who bets on the market, he should buy. For example, if someone tells you, I know, I say, okay, show me that you bought stocks every year, and show me every year if you are selling short in 1 year or buying long in 1 year, and then we can believe you. But no one will be doing this, because the market can change at any time. 2019 was a good year, and I was always saying, oh, 19 good. But in February, I told you that the market is bad because I begin to see that the market is going down. Okay? So this is the market. So you can't just expect something and buy or sell short and wait a long time. When you wait a long time, it means your risk will be more and more, because you are not doing day trading. So understand the difference. In day trading, the day direction or many directions, you can see it, and it doesn't take much time. Let's say you open your day traders who are professional. They are not doing like they buy in the morning and they go sleeping, or they go have a nap, or they go have a picnic, or they go to the gym, or they go somewhere else and they leave their trade until 4 o'clock, and then they come at 3:50 and they say if they make money or no. This is stupid. Those guys are there every minute. Sometimes the market, the few minutes, 10 minutes, 15 minutes, it goes up. They buy. But whenever they see the stock is going down, they sell, and they sell short. It means they are very, very active in doing a lot of trades. Okay? So they are not stupid people. They are not thinking that the market will send them the money because you wait. They don't do that. They have strategies, they have techniques. Okay? And if they stay 5 minutes, 10 minutes, 20 minutes, they get some money, they exit. And they see where is the market going. Going up, they buy more, they buy again. What if they go down? So they do another trade. So you see that? It means they do what I call is what we call adaptation. Day traders, they are very good adapters. Now, what does it mean to adapt? It means you see the situation right away, what you see, what you get on the chart, and they decide what to do. Okay? They don't, someone asks them, oh, sell short, buy long. No, they see the chart and they see where other people are doing. Okay? So if you want to be a day trader, you should be flexible. You should have money, and you shouldn't trade all your money. Let's say you have 25,000 or 30,000. You can take just 5,000 and you trade with it. So you should not take all your money, except when it is something that it is very, very good because of the news, and you see everything is green. You put too much money. Okay? So don't be always greedy. So if RDM say the problem is FOMO, for me May saying once is a lifetime chance right now. Now, I don't know what does it mean, FOMO? I think you are from Canada, right? So can you explain what does it mean, this FOMO, FOMO? I don't know what is it. So, Bakito, Zaha Karim, Zaha Al-Blad, sorry for being late. No, you are not sorry. We just begin. We spoke a little bit, but it's not big deal. Okay? So, as I told you guys, it means in these weeks, in these months, day trading is very good. Because you see, I can give you some information. The candlesticks, as you see, daily candlesticks are very, very large. It means sometimes the stocks do high percentage. And this is excellent. Okay? So I don't know if I can explain this, if I can get the paint. I don't know if I can get it. Oh, that's good. Today I have the paint very easily. Last time it doesn't work. So I can explain this. I can explain this. So let me explain this. Okay. So let's say I give you the day. Let's say today is like this. Okay. Now this is a daily candlestick. Now, let's say we speak about a big stock, let's say Apple or Facebook or whatever. Let's say just we give an example, okay? So 250 is the open. So this is the open at 9:30. The open, we mean at 9:30 the stock AM, the stock has begin with the open 250. Any stock, it could be Facebook, Apple, or any other stock, no problem. Then, most of the time, but not all the time, if the stock is going to be heading south, it means going down. Sometimes it goes up, let's say 255. Let's say 255. And this is the high of the day. So, now, day traders, here at the beginning here, when they see the stock is going up from 250, they buy. Okay, they buy, they wait. Let's say here, 20 minutes, and the stock has gone 255, so they get $500. It doesn't mean that they get $500 from the beginning to the end. No, it could be 500, it could be 400, it could be 300, depending on how you enter or when you enter. It could be 200. This is for 100 shares. Okay? So, and then they see that the stock doesn't go any more up. This is the high. Then they see the stock begin to go down. Now, whenever it begins to go down, there is no way to go up. They see it. Let's say they sell short. Let's say at 254. Just an example, $1 down, they 50. Now let's say it goes down to 235. Okay? So this is it goes down. So this 235 is the low. And then when it stops here, and this is called the close. Let's say the close is 238. Okay? Now, so they sell short wherever the stock is bombarded with the selling orders. So the people, they understand that the day will be bad. So they sell short here, they sell short here, they sell short here, because they don't know where it stops. Sometimes Apple has gone one time $29 a day and up $29 a day. So understand that $29, if you get just $20, okay, $20, you are getting let's say $2,000 for each 100 shares bought. Okay, just when you get $20, you can get $2,000. So now when they see things stops and there is no more people who are selling short, the professional people begin to buy back. It means the stock market, they begin to buy, so they can also sell short here, and they begin to buy for few dollars here until the market at 4 o'clock. So before clock, let's say at 3:59, because they have good execution, they have a lot of stuff, they exit. Okay? So this is just a scenario of a day trader. Okay? So this is just an explanation of a day trader. Now, FRDM said, yes, fear of missing out. Yes, you are right. Artkov said, hello Karim. Hello Artkov. Bakito, lol, yes. Top Series said, Buffett said 390 million on Delta and Southwest Airline. 8U now direct. So QW, I don't understand what you mean, but 8U now direct. Are you now direct? Oh, yes, I am live, yes. So top series, what do you mean by Buffett sold? Oh, Buffett sold 390 million on Delta and Southwest Airlines? I have no idea. It could be. Because all this what we call insider trading, it means those who have big they have big chunk of the company, especially mutual funds and hedge funds. If they bought a lot, so they should declare what they have bought or sell short. So you understand, okay? And you can find it in this in a stock which is called insider trading. Okay. So, but when you said Buffett sold 390 million on Delta and South Airlines, when? Can you tell me when? Because the time, maybe he got more information about the coronavirus stuff. I don't know, but he could get some information that makes him decide to sell. Okay, but understand that Buffett, he has in the portfolio, he has a lot. QW, how I know if a stock finished accumulation? Now, the guy who explained to you accumulation, he will give you the secret. So for me, my trade strategies, I don't know even what does it mean accumulation. Okay? It's a word that people they use because some people they advertise for it. So what does it mean? It means people are buying and waiting. Why, if they are buying, why the stock doesn't go up? So this word accumulation, 2 days ago, but top series, do you know if it is now they sold or it is 2 months or 3 months ago? Because I don't know how the exchange should get the information from big investors, and it should be put in the insider information, because insider information, it's not just the news. So if he sold 390 on Delta and South Airlines, let's see. Okay, let's see here. You say 2 days ago. It means maybe on Wednesday. It could be. 56 million shares traded. Here we have 39. Here we have 47. Yes, Delta is doing worse than Dow Jones. Yes, it's clear. But now Delta is going down, but he should have his own reasons. And you say Southwest Airlines. Ah, yes. Southwest, if it is this one, 8 million, 7 million, 9 million. Here, 8 million. So we will, yes, it's too bad. And as you can see here, that the Dow Jones has not gone down that much as this LUV love. I know this ticker a long time ago. So you see that the downtrend here, or the correction, is very bad compared to Dow Jones. See? This company has been going down too much compared to the average. And this line, which is yellow line, is the Dow Jones. Okay? Thank you very much for the information. I didn't... Tara Haskins. Hello, Karim. It's Salah. Thank you very much, Salah, for coming. So, as you can understand, is that let's say when Warren Buffett sold some shares, all the people will know, especially those who are following what we call Warren Buffett, especially big investors, because they want to know what he is doing in order to follow him and to copy his investment. But unfortunately, he, like his Berkshire Hathaway, it was from the 60s, 50s or 60s he began investment. So they should be very, very old people, because when you follow him right now, it's different. The market has been different, and so. But since we spoke about Warren Buffett, let us go and check his portfolio and see what's going on to his portfolio. So, Berkshire Hathaway A is his portfolio, the big one. So you can see that Berkshire Hathaway is nearly doing little better than Dow Jones. So you see that? Because this line here is Dow Jones. Okay? Is Dow Jones. And the green here and the red is Berkshire Hathaway. You see that Berkshire Hathaway do the same as the market, but it is just above the thing, because most of the stocks are in the stock market. Okay? So if we can see in the past, you can see here, sometimes, here you see, Dow Jones was doing better than Berkshire Hathaway. You see that? This is Berkshire Hathaway stocks, and this is Dow Jones. Okay? So Dow Jones, since the beginning of 26 December that I told you, 2018, when we have the big trend, Dow Jones was doing better. You see that? But now they are doing the same. But before, Dow Jones was doing excellent. It's more. Here we are reaching like 13% or up. But now they are doing the same. Because the crisis happened and everything is going up. It's going down. Now, as you can see, here, 344,000. Now, 344. Now, 267. So here, about, let's say it is 68. So let's say it is 32,000. 32,000 is 73,000. 73,000 is lost. 73, it's like I think 22% or something like that. Okay, so the market has lost maybe more than Warren Buffett think right now, but it's the whole market is going down. But the guys who want to follow Berkshire Hathaway, you can check his the other thing he has, the ETF. Yes. Guys, if you want to follow Berkshire Hathaway ETF, it is 178. If you, for example, you want to follow Warren Buffett stocks, okay, you can buy this, and it's better than the market, the average of the market. It's better, as you can see. It means if you bought, for example, Dow Jones ETF, and if you bought Berkshire Hathaway ETF. And by the way, I will tell you something, that Berkshire it is owned by Berkshire Hathaway, but it is just because people, they want to imitate him and to make an ETF like him. But he put his own so that no one will imitate him. They can imitate him in some stocks, they can, but no one will stop them from doing that, because Berkshire Hathaway, he can change the stocks as he wishes, and sometimes it takes long to be posted, because I don't know how long for the exchange to put information, because I understand that when something is announced, let's say as Top Series said, Warren Buffett sold 390 million on Delta and South Airlines 2 days ago, but we will never know. I don't know for sure when he sold them, because when he sold them, I don't think that it will be public right away. I don't think so, because this information could take long in order to go to the people, to the investors. Because if you are following any stock, you should see the shareholders. Okay, you should see the shareholders, and you should see what we call insider trading. Okay, I have seen it before. I can search for you guys. Top Series said, can you compare Berkshire Hathaway versus Dow Jones from the beginning of time? I don't think that my charts can go there, but let's try. Let's try. Let's put the yearly. Oh no. So here we can begin with 1990. So from 1993, the portfolio has gone so good. You see that? You can't compare it with... so for example, from, let's say we take 1990, this is what I can get. I don't know if I can get, no, I can't get that, I get just to 1993, but I understand that portfolio of Berkshire Hathaway has been before. But let's say, do you see Berkshire Hathaway, how much it was? It was 5,500. 5,500. Now it is 267. Let's say 5. So we have 20, it means 40. So it nearly, like, let's say here, it's a, so it's like 40, 45, it was 50 times. 50 times what Dow Jones get. So as you can see here, Dow Jones has got like until here, which is which if we take the percentage, let's say it is 993%. But you see, 5,000, not 5,000%. But if you calculate, let's say you bought it here 5,000 in 1993, and now you are getting 267, and then you bought 5,500. Okay. You are getting 500 times, I think. So you are not getting you get like $50,000 or something. If you bought let's say Dow Jones, from 5,000 you can get 50,000. But from Dow Jones you get 5,000, you get 267,000. Okay? That is so big. So the reason for that is that he chooses the stocks and he avoids the stocks that are not good in the market, because Dow Jones has the stocks and they don't change them. But Berkshire Hathaway changes the stocks. Okay, he changes stocks. So this is just, but understand that, let's say here is the reason, which is very, very good to know. Let's say if you bought, okay, 2008. So here, it was 147,000 and the top. In the low, it was 74,000. 74, it goes to 167. So from 2008, you are getting like 300%. Now, for Dow Jones, you are getting 150%. It means you are getting less. you are getting less than so here we have about more than 3 times, and here we have 1 time and a half. Okay, so it is just to compare things, because Warren Buffett, he can change the volume of shares, he can change companies, he can see other companies to buy, other companies to sell. Okay, but in Dow Jones it is static. They don't, except in 2018, guys, when I told you about General Electrics in the beginning of 2018, when we have the crash 2018, or the big correction, I have seen the Dow Jones and I have showed you that the one stock that was not doing good later, which is General Electrics, and then they delisted it in 2018, I think in June. They delist this stock, and it has stayed 110 years in the stock market. Okay, so guys, this is just an information about portfolio, because portfolio it's better than the index in the way, if you choose better stocks and you leave them, you will get more, or you get better than something which is static. And now I will give you an example. Okay, to understand that that sometimes it is crazy to stay with a loser. And I have a lot of people, they ask me always by email, and they ask me about their investment. Some, they are very courageous to show me what they have. For me, I don't know them. It means they sometimes, most of the time, they are my students. So I don't know, they are not my friends, so they are really, so I don't know very well. But I help them understand what is their goals, because understand that when you are doing an investment, you should have goals. Now, what if you have a stock that it was doing good, but lately it was not doing good? So I'll give you an example. I always give these 2 examples, and people, they know it. So let's say give you an example of Sears. I think you have heard about Sears. Sears is a very well-known brand in America. So you see, I was trading Sears before, okay? I think I have been trading it in some of the years when they are going up. I have been trading them. It's very good stock, because this is a yearly. It doesn't show the monthly or the weekly. But understand that this stock was $12. It goes to $195. So it's a big deal. Only in 5 years. From 12 it goes to 195. So it's a big investment. But from 195, the second year it goes to $26. So you see? So if you are staying like this, continue to stay. Now it is 12 cents. 12 cents. And still some people think that this will go up again. That's why they stay from here. They stay until here. All the people here, all the big guys, they have been selling in this year, 2007. They have been selling because 2007, it's before 2008 when we have the crash. The stock market crashed on 2008. But this stock in 2007, it began to crash. It lost money. Okay? So almost all the big guys have sold here. The people who stay until here, you find other people like who have a lot, like mutual funds, like the other guys, like investors, some investors who don't know what they are doing, and they lose it all. Okay, and then it goes down 12 cents. Who can believe, if you ask someone in 2007 that your stock will be 12 cents, he will never believe. That's why I told you, guys, do not say that this stock will never go down. Okay, and this is not a suggestion. This is just my opinion, because I see a lot in stocks that makes me understand that there is no fact that you can rely on, and then you say this is the truth. There will be no change. It's because Amazon, it's because of Google, it's because of Facebook or Apple or any other stock, because things change. Now, when a business cannot make changes, it cannot compete, it will collapse. And here in America, you can check the companies that they collapse and they go bankruptcy each year. You find hundreds and thousands going bankrupt. It's just because their business is not giving any much money. They fire the workers, and because the company doesn't make money. David Bourgeois, what are your general macroeconomic outlooks and targets? You are giving me a very detailed thing. Macroeconomic outlooks and targets.